Okay guys, welcome back to Laptop Trader. This is going to be a quick, very quick 10-minute video. Quick disclaimer here for you. Okay, please protect yourself at all times. That's the main message there. And my email contact, laptoptraderphil@gmail.com. So things or clues to look for when trading individual stocks. Remember, stocks are not like indexes or ETFs or mutual funds that have a big basket of stocks. So we have to protect ourselves when we're trading individual stocks. They can move quickly, they can gap, they can be sold off quickly, bought up quickly. They can be, stocks can be split one way or the other. Anyway, what we're really looking for are directional clues, and we're really looking for supply and demand, right? Which way is the trend going? What stage are we in? Is supply in control, or are buyers in control? Is demand in control? So, just this is a little bit about bar by bar and looking at stuff in a more detailed view. So, are there any wide range bars or candles up or down? In other words, is it something that sticks out to you on the chart as a wide range bar? Sometimes these can be referred to also as range expansion bars, where stock had been in a range for a long time. All of a sudden, we get a wide range bar or a range expansion bar from the normal range. So we're looking for a larger than normal candle or bar. Is there a gap up or down, especially on earnings and or on volume? Is there a shock or an unexpected gap one way or the other? Or is there sometimes we'll see a reversal bar, either up or down, which could be a shock or maybe a change in character for that stock. And we can also look for topping or bottoming tail bars or wicks on a candle. So these are all things that are clues as to direction and supply and demand. So let's look at a few charts. I'll show you what I'm talking about. This is stuff we go over every month, but recently I've seen more and more gaps on earnings, so I just want you guys to be aware of this. So here will be an example of a stock in a not a very clear uptrend. It's in a very slight long-term uptrend. This is a 5-year chart. So, this stock will move up for a period of time, like here, and then it'll move down in a period of time, and then it'll start moving up again. So this is not a fast-moving stock. This is the old established company, Coca-Cola. But some clues, we could see sometimes we'll have bars like this in a range, and then we'll get a range expansion bar, which was red, but then it just kind of reversed and would continue to go up anyway. And then we had here was a range expansion bar, a wide range green bar, price went up and then started to go down again. So this one is not giving us a lot of clues as to direction until this point. When this sold off and left this bottoming tail candle or bottoming tail bar on earnings, it actually made a new low at that point, I believe. And then it just buyers just took over. You could just see month after month. There's no red candles in there. And then we came up to this earnings event, and now we have another reversal clue where we had a green wide range bar and a narrow little bar which barely made a new high. And then we get sellers started to take over this market. And you could see it went, buyers and then sellers came in. You can just see that's a pretty strong indication that prices were going to continue down from there, and they did. And now this month we have kind of the reverse of that, where all of a sudden buyers seem to be more interested in this stock at that price. So this one's a little bit harder to read as far as direction goes. This would be more of a more of a long-term investment type of a stock. It's just an old company. It doesn't move very fast. When it does move, it kind of starts moving that way for 8, 10, 12 months, and then it'll reverse course. Okay, so that just has a certain personality to the way that this stock trades and the way price moves. Let's go to another one. Okay, so here is a another 5-year chart of rider system symbol R. Now this is a little more clear. It's a very clear uptrend. So there's really no question about that. But you can see how price here consolidated from 2021, mid 2021 through mid 2023. So this is basically a 2-year consolidation, okay? And all of a sudden we get this igniting, but what I would call an igniting bar. A wide range bar or a range expansion bar that ignites out of this large base, indicating that prices should, or we would expect prices to move up from that point in time. And that's exactly what happened. It then went into this very clear uptrend where almost like steps, where it went up, sideways, went up on another wide range bar, went sideways, went up on another wide range bar, and now it looks like it's going to, for the foreseeable future, probably continue that trend. So that's a very clear stage 2 on a long-term chart. So that is fairly easy to see, right? You guys can see, right, the wide range bar, another wide range bar, then these bottoming tails indicating, buyers are ever present wanting to buy this stock, another wide range bar. So that's very clear stage 2. Here is Amazon stock, symbol AMZN. An interesting thing about this one that I notice is on earnings or after earnings, this stock gaps one way or the other. So here, earnings came out and the stock had a big gap down, which turned out to be actually a great buying opportunity for Amazon. And then since this point in time, it's basically been an uptrend. Here, price gapped up after earnings. Here's another situation where price gapped down after earnings. So this stock has a personality of gapping after earnings. That's just there's something that happens with this stock. But we can see on this chart pretty clearly, here would be a wide range bar, a range expansion bar. In this case, that would be sellers, right? This would be supply coming to market. And then, 3-4 weeks later, we get what would be a gap down and a reversal where it gaps down and price immediately reverses. Buyers took over into earnings. You can see that we're, at the start of the day, it didn't look very good for the buyers or people holding Amazon stock. And by the end of the day, it left a wide range green bar. So that'd be like a kind of a shock there. There wasn't much you could do with that. This actually looked very good in earnings, like price was going to continue up, and then it gapped down in earnings. So that's just what happened. But so the clues on Amazon to me are not as clear as far as direction, especially around earnings. So that's just the personality of that stock. Now here's one that's interesting. So, you guys may be thinking, always look for something in stage 2, right? Or that's already going up. Well, what about a stock that has been going down for a while? Maybe a name you recognize. And all of a sudden, it gives us a gap up. So this stock was in a long-term downtrend. Clear stage 4 into a stage 1 sideways trend here. And now on Friday, we had price gapping up after earnings on Thursday. We also have a void for price to move up into. So if these words weren't here, you would see nothing but, just a white chart. There's no price action up here. That is a void. And what that kind of means is that, in other words, we see demand with the gap up on big volume. See the volume spike here? So we see demand with the gap up on big volume with very little supply left, or a void. So there's no more immediate sellers at this time. Doesn't mean the stock can't be sold, but for the time being, it looks like anybody that has wanted to sell has sold. And anyone who is short on Thursday into Friday just got crushed. And in order to close their position, they have to buy to close their position, increasing the buying on Friday. We can see supply and demand play out on the chart in picture form. In my opinion, this is the end for this downtrend and an early sign for a new stage 2 uptrend. However, being able to see this on a chart is not a guarantee, and we must use prudent money management and position sizing to protect ourselves. So everything I'm showing you guys is certainly not a guarantee. I don't want you to think that. But one other thing I like about this stock or this company is I recognize the brand at my local store, and so I know it must be selling. Otherwise, it wouldn't be there. I looked at the fundamentals and they look okay. They're not great, but check them out for yourself. So the company does earn money. It's not a company that's losing money, but I recognize the brand. So that's kind of important to me because now I can put a picture of the brand and the product with a chart, with the stock, and now on Thursday and Friday, I see earnings came out here. The next day, we got a nice big gap up, and a little bit excessive on the gap, to go from around $24 to $32. That's a really big move. But sometimes when buyers take over, that's just the way it is. It may pull back, it may give us a buy setup or something, but for right now, buyers are interested in the stock, interested in this company. So that's an example of a stage 4 to a stage 1. This has been in a sideways trend since last year in September, October. So you're talking about 4 or 5 months of consolidation, and now all of a sudden out of nowhere, after earnings, we get a gap up. So that I would think would be a positive sign for prices to move up in the future. Here's one I've been watching for quite a while, PetMed Express. Just looking at this red line, this is the daily chart. Stock was in a clear downtrend, and then it reversed course and moved up, right? We got this wide range bar. Look how wide that is. And look at the volume. All of a sudden, buyers are interested in this stock at that price all day long. But then something weird happened. It retraced like 99%. So I don't know what caused that. I don't really care. But then it kind of gave us this W bottom pattern, which, again, prices ignited out of this area. And then we went through this period of selling again where it kind of curved up. This looked very good here. And then all of a sudden it gaps down. It leaves this bottoming tail, which is weird. The next day it puts in a wide range red bar. So this is not as clear as far as, can buyers step up again and get this price moving back up? To me, it's not very clear. But in my opinion, this gap down below these purple lines, below support, was the end of this idea to buy this stock and go long for at least another month. Now, it's just damaged now. And it looked good until this point in time, until that day when sellers clearly took over. So for me, this is back on the watch list, and that's how I read it, right? When I see these big events, these big gaps out of an area where it should have went up, to me that's a shock. That's time to either exit the position, or if I wasn't in a position, just to put it back on my watch list to see if things calm down. So one thing about range expansion, what I'm talking about is, you can see here all these candles are roughly the same size. Some are a little bit bigger than the others, but all of a sudden we get this range expansion. Very easy to see, right? A wide range bar or range expansion. You can just see buyers just took over, right? Buyers just took over, but then sellers took over too. So this one is a fairly volatile stock at this time. So that's what we see on that chart. And I believe this is not the last chart. Weave Communications. So this looked great, right? Stage 2 uptrend, no doubt about it. Consolidated for quite, about a month, and it started to move up again. So this would be a directional clue, right? That prices are going to continue to move up. Well, we had earnings Thursday. It kind of sold off into earnings over the a 2-day period. Then we have this big gap down and a wide range red bar the next day equals this long trade is over for me. I've exited this position. Now that to me is like, get out of the way. It's probably going lower, and it's just going back on my watch list. It looked good until it wasn't, and supply took over demand almost immediately. So things can move very quickly with individual stocks. So what else can we show you? Here's an interesting one. Now I don't know if this is real. This appears to be real price action, right? Where this stock went up to over 500 bucks and then sold off, and then it was slowly bought up again, back up to 400 bucks, and then it sold off. I'm not convinced this one is real. I'm almost convinced that this was a stock split. I don't know that for sure, but you know, this is still just a case for having a position sizing rule in your plan and or taking profits along the way up, right? So if you bought the low or whatever, you know, let's say you bought here or something at, you know, 100 bucks. Well, when the stock's up at, you know, $300-400, I think there's a case there to take some profits, take some money off the table. So in case your stock gaps down one day, you don't lose everything you just kind of work for. But this happened in one day overnight. The stock gapped down from over 400 per share to about 100 per share. So if you did not take profits or you risked too much of your account on one position, this would have been painful to lose 75% overnight. By the way, fundamentally, the company makes money. The numbers are not that bad. So this is a profitable company, you know, and at one point buyers liked it until they didn't. So that's just simply a case to watch how much you have in any one stock. So this is a smaller chart or a smaller time frame chart from earlier. Remember Ryder? Let's see if we can go back to that. Yeah, here's Ryder, right? Clear stage 2 uptrend on the longer time frame. And we come down to here. And this is the smaller time frame, or what I would consider my action time frame. So this is just a daily chart. And we can see it had this downtrend, right? And then it kind of hit a floor. It was bought up, came back, hit the same floor again in the same area. And this one's interesting to me because it gaps down and then kind of reverses course almost immediately. And on this bar right here on earnings, if you read these candles correctly, price opened here, closed here, and then the next day it actually gaps down and opens here. Then it's like all day, just buyers took over, right? So that to me is a directional clue, right? And then it moves up. And then it kind of, now it's giving us kind of this, what I would call a sequential pullback, right? Each candle is about the same size. These two have some bottoming tails indicating that buyers were present trying to push this price up. So if we get, you know, maybe a green candle here over these two, to me that would be a valid buy setup. Okay, so that's all I'm showing you there. That sometimes these clues happen around earnings. Anyway, that is the last slide. I'll let you guys go. I hope that helps. And let's go back to the first page. So we'll just remind you of some things to look for, right? Look for supply and demand. What stage are we in? Are there any wide range bars? Are there any range expansion bars? Is there a gap up or a gap down, especially on earnings? What was volume like for that event? Is it a shock? Is there a reversal bar, either up or down? Again, another shock. Is there a change in character for this stock? Are there any topping or bottoming tails or candles? So those are just some things or clues I look for when trading individual stocks. I hope you guys enjoyed this video, and I'll publish this today. Have a great weekend. Bye.